I now have the conference over to Mr. Annathan Shekhar, Promoter and Managing Director of Galaxy Surfactants Limited. Thank you, and over to you, sir.
Thank you. A very good morning to all of you, ladies and gentlemen. As we begin our con call for the financial year 2019 and 20, I trust and pray that you and your families are safe, healthy, and secure. Ladies and gentlemen, these are unprecedented times. It was only 4 months ago when we had our last con call in the first week of February 2020. But as Vladimir Lenin had once said, there are decades where nothing happens, and there are weeks where decades happen. Within 15 weeks, to be very precise, the whole world has undergone a 180-degree change. Change that has not only impacted our today, but which shall live on and also impact our future. Change that has not only brought the world economy to a grinding halt, but which has also disrupted lives across the globe. Within weeks, we have experienced what people had not experienced for decades. Unprecedented times call for unprecedented measures. The lockdown imposed by countries across the globe, as well as by our government on March 23rd to protect lives, impacted business operations adversely. But it also gave rise to our new age warriors on the ground who comprise our doctors, police staff, administration, and other authorities who have selflessly been defending and fighting for our lives and our country. We thank these warriors. They are our real heroes. Daily lives, though came to a standstill, essential products and services were still the need of the hour. It was time for our customers to stand up and deliver the essential products required for all our lives. To enable and equip our customers, Galaxy was ready. This was about our nation and our people. Our COVID Yodhas, as we internally call members from the plant, operations, and logistics, not only fought through the various risks and lockdown restrictions, but also ensured we keep on delivering and fulfilling our customers' needs 24/7. This has not been easy. Right from restrictions imposed by local authorities on traveling to work, to restrictions to ports and unavailability of transportation mediums, operations were severely impacted. But as they say, there is always light at the end of the tunnel. Things have not only improved since lockdown 1.0, but we do see normalcy returning sooner than later. We acknowledge and thank our COVID Yodhas for braving this storm valiantly. In these grim times, ladies and gentlemen, I would also like to share some positive news with you. We at Galaxy celebrated our 40th annual day on 22nd of June 2020, that is last week. The journey, which began in 1980, has now completed 4 decades. 4 decades of creating value and growing with our customers. 4 decades of growing with our country's growth, which has grown by over 200 times. And building Galaxy to a globally recognized, reputed, and respected brand. The 4 decades have seen our profitability compound at a CAGR of 28.5% from 1 lakh in 1980 to 230 crores as of FY 1920, and our revenues have multiplied by more than 20,000 times. But more than the financial numbers, these 4 decades have been about the sustainable partnerships and relationships which we have built and nurtured with all our stakeholders, relationships which have not only stood the test of time, but also enabled our growth over the past 4 decades. We thank all our stakeholders for their continued support and cooperation. Moving on from the last 4 decades to the last decade, the last decade has seen your company grow at a CAGR of 10.9% in volume terms, 15.9% in EBITDA terms, and 19% in PAT terms, maintaining, of course, our threshold ROC of 22%. Both our segments, that is performance surfactants and specialty care products, have seen volume growth in excess of 10% during this period. As we enter the next decade, the last year of this decade, FY20 was a relatively mixed year for us. I say mixed, as while all our segments and regions registered growth, this growth was relatively subdued in the second half of the year. While our performance surfactants business grew at 6% in volumes, specialty grew at 1.7%. Overall volumes grew at 4.4%. Egypt made a strong comeback, registering a 22.2% growth in volumes over the previous year, which primarily drove the performance surfactants volume growth. Specialty business growth started off on a strong note, registering 10% volume growth in H1. On account of seasonality in Q3 and the outbreak of COVID-19 in Q4, the specialty business registered a decline of 6% in H2, that is in the second half of the year. Lack of adequate credit for the distribution channels, along with reduction in inventory days, impacted business in India, which remained sluggish and flat for the year. The rest of the world markets, which had outperformed last year, grew 2.8% in volumes in FY20. This was mainly on account of a decline of 11.7% experienced in the second half of 1920 due to lower offtake of specialty care products. In Q3, on account of seasonality and on account of outbreak of COVID-19 in Q4, which severely impacted the developed nations initially. The Africa, Middle East, Turkey region made a strong comeback this year, registering 9.4% volumes growth, mainly driven by the robust performance registered by our local Egypt market. Now, while business has been relatively mixed, business operations too have been adversely impacted by the following 2 incidents. Lockdown imposed by the government on March 23, 2020 completely wiped out our last week's sales for the quarter. The major impact though will be seen in Q1 FY2021, where due to supply chain disruptions, our ability to service the underlying demand got severely constrained. The Tarapur incident, which though did not impact Q4 1920, shall impact Q1 2021. The blast which took place at our M3 unit resulted in 3 casualties. This has left an indelible blot on our illustrious 40 years journey, which till April 13, 2020 had not seen any serious incidents involving casualties. While as an organization we have always given safety the topmost priority, this incident has taken us back to the drawing board. Right from implementation of behavioral-based safety for all employees, to refining and improving the safety SOPs, to framing new SOPs, to all process hazard studies for operating under the COVID-19 scenario, to conducting safety audits and evaluations by the safety teams, we are leaving no stone unturned to ensure such incidents do not happen in the future ever again. All necessary support, financial, emotional and social, has been extended to the families of the deceased. They will always remain part of our Galaxy family. Looking ahead, ladies and gentlemen, while the demand for performance surfactants remains fairly stable and visible, our specialty portfolio can see slowdown for the next 6 to 9 months. Q1 FY2021 has seen headwinds and challenges on account of supply chain disruptions which impacted people and operations, including production, material clearance at ports, and our service commitments to our customers. While demand for performance surfactants remains fairly stable, cut down on discretionary spending along with hoarding of cash will impact new launches and sales of existing premium products, adversely impacting our specialty care business. But we remain hopeful, and I say that as the situation month on month has been improving, for example, with April being the worst, May being better than April, and June being better than May, we hope this continues. Though sales and utilization levels have not reached the pre-COVID levels, we remain confident that within the next 3 to 6 months, we should see the same, provided consumption gets back to normalcy and there are no further lockdowns. The region-specific outlook, though at this moment will be tough to predict, and clarity will only emerge post Q4 FY 2021. A positive though has been our Egypt plant, which faced no disruption shutdown on account of the pandemic. Therefore, momentum of Q4 should sustain going ahead for Egypt. The capex plan for our specialty products remains on track, though execution and operationalization will get delayed by 6 months. The 2019-20 began with the operationalization of our performance surfactants plant at Jagadia. While nobody could foresee the rise in demand for performance surfactants on account of the pandemic, it is our ahead of the curve capex planning and execution that has and is holding us today in good stead as the demand for performance surfactants rises. 2019-20 also saw your company winning several reputed awards in the areas of 1. Innovation, the Gold Award at Home and Personal Care India for our oil-soluble surfactant PILSG. In terms of human resources, our certification as a great place to work for the second time. On intellectual property, an excellent use of IP and Innovation Award at the IP Summit to finally my own nomination as a finalist at the EY Entrepreneur of the Year Awards 2019. To conclude, ladies and gentlemen, with an operating cash flow in excess of 3,300 crores, ROC of 23.5 crores, and PAT growth of 20.6%, awards and recognitions for our performance in multiple areas and growth across segments and regions, this has been good end to the last decade. For your information, the capex spend for the entire year was 230 crores, made up of 150 crores of the capex that we had begun at the beginning, and we also invested 80 crores in a new land acquisition at Jagadia. At Galaxy, sustainable and consistent value creation for all our stakeholders remains our motto. We have consistently demonstrated it over the last 40 years, and the next decade and decades to come will be no different. We remain committed to growth, and despite the headwinds, inherent robustness of our business model, sustainable relationships built over the years, gives us the confidence to achieve a lot more in the decades to come. On that optimistic note, ladies and gentlemen, thank you once again for joining us today. I would now open the platform for questions, ladies and gentlemen.
Sure, thank you very much. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touch-tone phone. Participants, to ask a question, please press star and 1 at this time. We will wait for a moment while the question queue assembles. The first question is from the line of Sanjay Jain from ICICI Securities. Please go ahead.
Yeah, thank you, and good morning to all.
Good morning.
Good morning.
Yeah, first of all, congrats on completing the successful 40 years of journey. Couple of questions. On the gross profit margin, the margins have grown quite strongly at 36.4%, whereas our performance volume mix has reduced, but value mix has grown up. Is that we have sold more high profitable products in the specialty, or are there any one-offs we should be aware about in the gross profit margin?
Yeah, Natarajan will take this question.
Hi, Sanjay. Morning.
Yeah, good morning, sir.
Yeah, so, see, this essentially is in terms of the way we manage the sales pipeline and also the way we manage the risk in terms of a raw material, maybe major raw materials. So essentially, is a combination of the way we manage the risk and also in terms of how we are able to generate some better value creation in terms of the way we are able to price our performance surfactants.
So is it fair to assume this entire margin expansion has come from the performance product and not really from the high value specialty being sold?
No, it's not that. We also had, although specialty had a volume growth of only 2.8%, we also could have some, better pricing possible in that as well. So it's a combination of both specialty and performance surfactants.
And performance, these levels is not sustainable in a long run, right?
So it all depends if the demand remains robust and then we are able to continue this particular run rate, I think we would be able to retain some of them. But it all depends more on the demand side, okay, and how the whole scenario pans out. So I would want this particular rate to continue, but it all depends on how the external situation develops.
Got it. Thanks for that. My second is on the demand side, which you rightly said. On the performance product, now that there is a more awareness on cleanliness and hygiene, and we have seen SLES-based product like liquid hand wash and all things have been taken off very well. And the Jagadia plant, as Sir rightly said, has come in probably more opportunities time. Do you see this year performance product growing at double-digit volume? Now that we also have a benefit of pent-up demand, refilling demand for the depleted inventory in the entire supply chain, do we see performance outgrowing this year in FY21?
Yeah, so see, one is where what we see, Sanjesh, is that the habits now in terms of cleansing habits and cleaning habits and the hygiene consciousness is now taken a change for better, okay, for the consumers and as well as for the industry in a very, very decisive way. So we, on the demand side, we do expect that, this particular issue would continue, okay, but the only thing is the rate at which this continues depends upon, how it gets tempered down, okay, it will definitely be higher than the previous years, but whether this sort of rate, because there is a lot of stocking, people have really gone on to the other end of the spectrum in terms of hoarding. So now, having said that, we do see this as a positive in terms of growth of performance surfactants. But the only caveat that I would put here is in terms of the demand, growth being there, is in terms of disruption in operation that's not be caused, okay, by this COVID-19 stuff hanging its, head now and again. Because then those sort of disruptions certainly make it very tough in terms of operations to be able to service the demand. So we don't want the first quarter what we saw in lockdown 1 and 2. If a similar situation comes, that can be a damper. Otherwise, we do see the demand growth going up pretty well, and our preparation in terms of capacities being set up ahead of the curve, okay, certainly has been a good move.
One on the specialty side, now considering that our Tarapur plant was completely shut down for the one full quarter, I don't know have we started the production there or not, but how do you see specialty care product performance for this year? Will it be a significant decline in terms of volume, or do you think it will be a decline in the range of, say, 0 to 5%? How should we see specialty care products?
First of all, to clarify, Sanjay, we make a good amount of specialty products in Jagadia and Taloja as well.
Right.
So Tarapur is, because of the unfortunate accident, Tarapur contributes to about 8 to 10% of our volumes. Okay, and most of what we do is specialty chemicals. Okay, so now what we do see is that we have now come back to, we have received all the regulatory approvals in terms of commencing production. We also commenced production of all the products, okay, in a very phased manner after we complete our internal safety review, which we have put in place post the incident. So we've gone back to the drawing board, looked at every aspect, and then only when it is certified by internal team of experts, okay, we are starting. So we should be we are up and running on most of the products. I think some other products where we are waiting for the review to be done should happen in the coming days. The only thing what we see in specialty is if the consumers start down trading, okay, so there can be a situation where some of the high-end formulations, the launches, or the momentum that was there the previous year may get impacted. But we'll have to wait. Okay, so probably we can be able to make a clear comment on this, say in the next con call when we meet for the results that we'll be declaring for the first quarter. Okay, so but otherwise So for example, what I can say is that when people wash their hands more frequently, okay, it also ends up, drying their hands. Okay, so you need to have some moisturizers that need to be put into that, and that gives a good scope for some of our mild surfactants. So we only have to see as how it pans out in the coming months. Okay, but we remain optimistic that even specialty should find some good usage into these hand cleansers and all that.
Got it. One question on the tiering of the customer. Our tier 3 customer who generally contribute higher margin, that proportion has come down to 34% in FY20 versus around 39.7% in FY17. Any reason why the tier 3 customer contribution is falling? Because we understand that in India it is more of tier 3 who will drive the growth.
Yes, so it's essentially some sort of basic. Like we had tier 1 and tier 2 also going up. So it is essentially, it's not that, they didn't grow. It's only that in terms of the proportion, we had T2 growth happening better last year and T1 as compared to T3. Otherwise, our intensity in terms of growing our business with tier 3 customers, okay, is extremely good. So it's probably only some sort of arithmetic that leads to that. But the focus, it is extremely high.
So from here on, should we see a proportion increase in the tier 3 category as well?
Yeah, we should see. So only thing that I would like to say is that tier 3, in terms of the way this COVID situation has impacted people, we wouldn't be so clear as to which of the T3 customers would take some more time to get back to business.
We can make a general statement, Sanjay, is that the T3 segment has got more impacted because of this lockdown, not only in India but across the world. The T1 customers have been much more resourceful in terms of coming back in terms of their operations. So the T3 people have certainly been impacted.
Got it. Just last two bookkeeping question. What is our expectation of capex for FY21 and 22? And number two, in terms of Tarapur, what would be our loss and how much of it can be recovered from the insurance?
See, as far as the capex for 2021 was based on Adelpha and two projects which are already under execution, 100 crore outlay is still to be done over there. Okay.
It is 100 crore per year or it is combined 100 crore?
It is 100 crore per year. I am talking only of 2021 as of now.
Okay.
That is one. And as far as our insurance is concerned, Tarapur is fully covered by insurance. There is no issue. We covered profit and loss insurance.
Oh, so everything is covered in that way.
Even loss of profit is also covered.
Okay, loss and profit. So got it. That's quite helpful and best wishes. Thank you.
Thank you.
Thank you. A reminder to participants, anyone who wishes to ask a question, let press star and one. The next question is from the line of Nitesh Jain from Birla Mutual Fund. Please go ahead.
Hi, thank you very much. You provided a good summary of both the businesses, the performance surfactant and the specialty products. So I want to ask you this so-called muted outlook on the specialty portfolio. Is it a very short-term blip that you are witnessing? Because by a very long term, the trend line, the growth prospect for this portfolio is quite strong. So, this is just 3 months, 6 months you are looking at, or you are, and then perhaps in this second half it can come back to say 8-9% type of volume growth.
Let me say like this. See, Galaxy's mission always has been to improve the quality of life in terms of cleanliness, hygiene, beauty, care, comfort, wellness. And I have made a mention that the consumer trends, both in India and globally, has been and will continue to be towards safety, sustainability. Now, that particular trend, whether it is COVID or non-COVID, is going to be consistent and then continue. And that is where the specialty products will, have been designed and innovated to address the requirements of sustainability and safety of consumers. Now, whatever we are seeing now is that there is certainly an impact on discretionary spending by consumers across the world. One is because of, as we have seen, there has been loss of employment, one. And number two, people are more or less staying at home. Okay. Now, we do believe that, once the world comes back to normalcy, okay, the specialty should grow as they have in the previous period. So today, the entire consumption with respect to consumers has been allocated largely to cleaning and hygiene and sanitation, rather than to personal beauty or personal beauty. I mean, that's where. So whatever we are going to see with respect to specialty are going to be short term, and we believe that once we come to a semblance of normalcy, whatever we have seen in the previous year should continue.
So, sir, I mean, on the same line, if we just ignore the short term and say FY21 performance, say 3 years down the line, how do you see the Galaxy as a company's portfolio between the surfactant and the specialty? I guess the specialty is around 1/3 today, right? Or some 30% type. So what could be the ratio, say, 3 years down the line?
See, actually, as Natarajan here, Ritesh, so as I said earlier, our clear focus is to grow both the legs of our business, that is both performance and specialty. So typically today we are at about 1/3. So as we had said, as you continue to grow both the legs, okay, what we would see is that the specialty can be from say 30 to 40%, 1/3 to 42%. Okay, but then it can't reverse because essentially specialty goes into certain specific formulation in lower dosages. Okay, so in volume terms, okay, you can always see 40, 60, but what will be of relevance is in the way the portfolio changes within specialty, because there will be a lot of high-end innovative molecules that will keep coming out of our pipeline, and that's what we're going to make. That will make a difference in the coming years.
Sure. Mm-hmm. And lastly, can you elaborate something on the R&D initiative which the company took for the full of the financial FY20, some of the successes, or what are the hits or misses, I mean, for the full year as a whole?
See, for R&D, the various new products that we launched last year, like one of the awards that we received for an oil-soluble surfactant. Okay, so these are all, which are receiving similarly GLI 21, which is a very, very mild cleanser. Okay, so these are all receiving very good listing from the market, and that is where we are preparing our setup at Jagadia to be able to service this sort of a demand. So that is going pretty well. Our investment in R&D infrastructure enhancement, okay, that we have planned, that also is slightly impacted because of this COVID-19 situation. We should be up and running, say, by the end of this year. And also our multi-purpose plant at Tarapur also would be ready by the end of the year. So we are set ourselves well, okay, in terms of encashing on the consumer trends that we see, giving a fillip, okay, to the specialty care portfolio.
Sure. And lastly, if I am allowed to ask, the current setup which you have for both the performance surfactant as well as the specialty, I mean, the current capacity is good enough for how long? Is it 1 year, 2 years? Without adding any new project, you can meet the demand up till what?
See, our capacity utilization will be in the region of about, how much? 61%. 61%. So we have enough amount of headroom. As we have mentioned many times, as soon as it reaches so-called tending towards full capacity, we immediately start thinking about increasing our capacities. We never like to operate at our full capacities. It has always been so. Build capacities in anticipation and make ourselves ready in terms of the market.
Got it, sir. Thank you very much.
Thank you. The next question is from the line of Sarvanan from Unified Capital. Please go ahead.
Hello. Yeah, thanks for taking my question, sir.
Yeah.
So this 80 crores that we have used for land acquisition, this is for the new capex that we are planning to undertake in the future years?
Yeah, this is for taking care of the future capex requirements of Galaxy, because as you know, our Taroja we have mentioned is more or less full. We do have Tarapur also. We are executing a particular capex in one of our premises. Jagadia, we do have some amount of space, but this is in terms of preparing for the future.
Okay. So the related capex, would it start next year or the following year?
No.
FY20 or FY23?
Saravanan, you should see what we're doing is that this is to be future ready. So you need to obviously buy the land and get your environmental clearance, everything done, which takes 18 months, 24 months. So this is more in terms of future, which I'll say medium term. And the capex that will come, say, beyond the current 3 years that we have, which will come up in Jagadia only, with the existing plant.
Yeah. And this entire COVID crisis, is it a blessing in disguise for organized players like us? Unorganized players will find it, would they find it tough to compete with us?
I wouldn't say that. I mean, I would look at it that it is an opportunity for almost everybody because the end market, it behaves in a very strange way in a short span of period. There is no predictability or certainty about everything, at least during this short term. So for everything to come to a rhythm, it is going to take time.
And in any case, we don't want to call it a blessing, whether in disguise or not in disguise, because I think there are people who are suffering, and then it is really scared people. There's a fear psychosis. So we would want things to return to normal quickly. Okay, and we are very particular in terms of ensuring safety and health of our employees. That's very critical. Okay, so operations essentially need to be done with this in mind.
Understood. The last question. So our R&D initiatives would now be focused on, performance, or we will still focus on specialty chemicals? Because now there are a lot of opportunities in performance itself, right? Because of the hygiene and
so our R&D, to put it very clearly, Saravanan, our R&D innovation focus is majorly derived out of the consumer trends, emerging consumer trends. Okay, so as we see the consumer trends emerging, which needs us to be focusing on something different, we'll do that. Okay, so it's too early to comment on that, but we already have a good amount of things in our pipeline. So our focus will continue to remain in terms of being relevant, in terms of product offerings, when well calibrated to the consumer trends that are emerging. So that's what I would like to put it across as.
Thank you, sir. Thanks for taking the question.
Yeah. Thank you. The next question is from the line of Sneha Talreja from Edelweiss Securities. Please go ahead.
Hi, sir. Good morning, and thanks for taking my question. It was more pertaining to your Egypt operations. So just wanted to understand, so the market share loss that we had done, are we back to similar levels, and what are the current operating rates in Egypt?
I would say that, as far as local Egypt is concerned, certainly compared to 2016 or 2017 times, the market has come back to its original level. And we have seen growth as far as the local Egypt market is concerned. And but the only thing that we need to the growth rate of home care in Egypt, including inflation, of course, has been at about 13.3%, but only 2.8% on constant value terms, because the T1 players were are major players at about 62% market share, and the local players have a low share. So we have seen, for example, we had mentioned that the local consumers had downtraded in the initial years, but today we do believe that the T1 customers have been able to come back to their original level. So, but though we have had no impact in the first quarter, Egypt as a country has again been seeing a surge in COVID cases in the last about 1 month. So we do hope and pray that it doesn't significantly impact the supply capabilities of us. We would like to remain optimistic that we are able to continue, because in the first quarter we were not impacted at all. I think we should be able to see the same. We saw the same level of momentum that we saw in the last quarter of last year and the first quarter of this year. So the only risk as far as Egypt is concerned is in terms of the COVID situation. So let us wait and watch, and then for the next maybe let us say 3 or 4 months or so. Yeah. However, I should say that the other countries in the Africa Middle East region had an impact of this COVID in the last about 3 months or so. So we would like to keep waiting and watching before we come to some definite picture with respect to what we think can happen.
That's very helpful. So secondly, as the Indian operations, if you of course said that May was better than April and June is much better than even May.
Yeah.
Could you quantify in terms of what was the utilization when we started? And I think you just said that currently we are at about 61. So in case we can give some month-on-month progress of how it has been for us in terms of utilization rates.
Yeah. When I mentioned about 61 capacity percent, that was for last year. Last year capacity utilization overall. Okay. Now I should say that April we were very severely impacted. I mean, as far as April month is concerned, we would have hardly worked on a number of days because the lockdown was so sudden that we had to close initially and then seek permissions, and only when we got all the permissions could we restart. So April was severely impacted. And May was much better than June. Natarajan, you want to say something?
Yeah, so what I see, it's essentially April was severely, so it will go, say lockdown 1 and 2 which happened in April and the first half of May, was the severe impact. Then once lockdown 3 came, there was good amount of relaxation which enabled us to get our operations to a particular level of, at a particularly higher level. And June, once the lockdown was, we have a unlockdown 1 or whatever we call it, okay, things are much better. So it is directly proportional to the way we are able to operate given the lockdown conditions. So that's why we said June was better in terms of operations. The freedom we had to operate was much, much better in June. That essentially means the ability to service the demand, okay, was much significantly better than what it was in May.
Sure, sir. Just one last question from my end would be, are you seeing any structural changes after this COVID? Of course, your portfolio is expected to see a major change because, given the demand for, hygiene products is increasing a lot. Any structural change that you see, this particular product or a, portfolio can, do very well, or you're seeing higher amount of demand in terms of that? And secondly, what is the customer feedback as of now that is coming to you? Because I'm sure that you get a much early view from the customers and respect to demand. So what are you getting in terms of, from the likes of HUL or a P&G or even the smaller amount of, players that you are working with?
Yeah, one interesting thing is we keep hearing that consumers are washing their hands multiple times, washing their, bathrooms and wash basins and floors multiple times. So the consciousness with respect to personal cleanliness and hygiene is very, very high. So we need to see whether this is a major structural change, whether this is sustained. Because the order of magnitude in terms of increase of what we call, hand hygiene and cleanliness is multiple times. So we need to see whether this is going to be a structural change for the industry. And this is what our customers are saying. Yeah, Raju.
Yeah, so I think what I would say is that having said what Shekhar said, I think it will be too early to comment whether there is any structural change happening in this, except that the hygiene consciousness levels have gone up significantly. Now, what sort of this thing will lead in terms of product offerings or whatever is to be seen. Like today we are seeing veggie wash, meat wash offerings being done. Now, how the customers will lap it up, how they get used to it, how they'll continue to keep having this sort of thing will be seen. Now, other structural change which is too early to comment in terms of people stop going out that frequently. Okay, if they don't go on travel that frequently, they don't go to the beaches that frequently. Now, what will be the impact on certain formulations? We may probably only know, say, by end of this calendar year for us to make some statement. Now it's too early. We're not hearing anything on these lines even from our customers on a structural change, except that they're saying that hygiene consciousness has gone up significantly.
Got that, sir. Sir, thanks a lot for your time and the question. We'll get back. Thank you.
Thank you. The next question is from the line of Lakshmi Narayanan from ICICI Mutual Fund. Please go ahead.
Couple of questions from my side. First is that because of this change in the Ind AS, in terms of how do you classify your depreciation because of the right of use asset, what would be the like-to-like EBITDA? Because we always say that we need to actually look at EBITDA and not at the revenue level, right?
Around 4 crores depreciation is higher on account of Ind AS account.
So 4 crores. So, okay. And the other thing is that if you look at your EBITDA contribution across various regions, I split that EBITDA, like you split the revenues in terms of 3 different regions. What would be the EBITDA in terms of the same pie chart? India, MAT and ROW?
So that is not something that Lakshmi and we essentially want to talk about, because it is all the portfolio that will be there, specialty and in terms of performance, then the tier 1, tier 2, tier 3 customers. So it's a bit complex, and we would not like to mention anything on that front.
The reason of asking the question is that you had mentioned several times in your earlier calls that don't look at the revenues, because what is more important is your EBITDA and EBITDA per ton, right?
Yeah.
So
We
that's the reason.
in terms of how well we are growing ahead of the market in terms of volume, and we always say that our EBITDA growth will be higher than the volume growth, and PAT growth will be higher than the EBITDA growth.
So in terms of the volume, can you give that mix, India, MAT and ROW? Or it would be same?
The overall, as we said, we grew last year by 4.4% on overall volume growth. Yeah. And India was more or less flat, and Africa was almost at a level of maybe about 9% or so. And I think
the world was 3%.
Rest of the world was some 3% or so.
Now, there is made in India sold in India, and then there is made in India sold outside India, right? So, and then what is that mix?
See, we have always the international business constitute almost 65% of Galaxy's portfolio. So when I say international business, it is products made and sold outside India. So international business also obviously includes exports from India, the Egypt sales, as well as the USA companies sales. So our international business constitute about 65% of the total turnover.
Yeah. So my question is essentially whether the exports from India has actually gone up, or you think that would win. What is that percentage, and is there a increased export from India given various dislocations we see across the world in terms of supplies?
Yeah, so India, I think you can say exports out of India, say, will be about, say, 50 to 55%.
Of the turnover?
Of the turnover of India.
Okay. And has it trended up? And do you think that is going to trend up because of various supply dislocations you see?
So it has been trending up. That much I can comment now. Moving forward, whether it will continue to move at a much brisker pace is a combination of what happens in terms of supply disruptions elsewhere, which we are not able to comment today. But our the focus is to see how we are able to build more and more business, with all our customers across geographies. So many of the specialty that we offer from India, many of the performance that we offer from India, the objective is to see how we are able to grow that business out of India.
Right. In terms of your MAT revenues, right? So what's the broad mix of Egypt and non-Egypt there, and how that mixture has changed?
I think local Egypt will be approximately 40%. Local Egypt will be approximately 40%, and balance will be outside Egypt, 60%.
Got it. And one last question is that with respect to your clientele, right? I mean, a lot of your clients are very, very sticky in nature. And what's the mix, if you look at it, in terms of business coming from existing clients, and what is the business you got from completely new clients?
See, as we always say, our strategy is built on growing both the performance as well as the specialty products together. That is very important for us. Secondly, grow across all the segments of customers, that is T1, T2, T3 and the T4, and increase the value share with customers. So we like to work with customers across our entire portfolio of products. So in terms of the split, like we would have, say, with customers anywhere from across various customer segments and various individual customers, we would operate anywhere from, let us say, 3 or 4 products per customers to even maybe, let us say, 15 or 20 or 25 products per customers. So this is a very important element of our growth. So as far as new products is concerned, last year, I think approximately it would have been about maybe 5 to 7% or so. 5 to 7% or so.
Okay. So essentially you're saying that there is an existing customer's existing business and existing customer's new business.
Yeah.
And that composition would be about 95% if you look at the entire existing customer. I'm talking about the repeat customer business, which could be either an existing business or new business.
From new products for 1920 was about 6 to 6.5%. Okay. And these new products could go to existing customers, it could go to new customers also. Okay.
So that's what the new customer wise, how much it was? It completely new customers, like first time customers? First time customers?
It will be less than 5.
Less than 5.
Got it. Thank you. I'll get back into you.
Yeah.
Thank you. Participants are requested to limit their questions to 2 per participant. Time permitting, you may come back into queue for a follow-up. The next question is from the line of Pawan Kumar from Ratnatraya Capital Partners.
Sir, can you just give us an idea of how much of revenue proportion might come from hand sanitizers and this liquid hand detergent? And also, I wanted to check on when we are talking, how much pickup can we expect on the performance surfactant side of the business this year? Is it going to be pretty meaningful as of now from whatever trends you have seen?
As you said, we would not like to make any prediction or comment as of now because we are still in an uncertain zone. Okay. The major parameters that we see in terms of our not taking a call of trying to predict is the supply side uncertainty which is possible because of this COVID situation. So whether it is to do with, let us say, availability of drivers or transports, or even our people be able to come regularly to our factory, because you do see some areas being quarantined. Suddenly your building could be quarantined, even though you may be pretty safe. So these are the sort of uncertainties, and so we would like to be patient for the next maybe 3 or 4 months or something. Our job is to ensure that we are able to operate our plant very properly at all points of time and do our best. And our people have been doing tremendously in the last 3 months or so. They have overcome a lot of challenges, and they are all awake 24/7.
And hand sanitizers and hand liquid detergent wash, how much of that would be a proportion of your revenue, sir?
So, see, that will be difficult to comment, but then it is suffice to say that we supply to most of them who manufacture hand wash lotion. So we wouldn't be able to comment on how much of our revenues comes from the hand sanitizer and hand wash segments. But we supply to almost all the people who make hand wash.
Yeah.
So will we have a good proportion of market share with them? Maybe 20-30% or even higher?
Now, as you say, we supply to almost all the people who make hand wash. See, hand sanitizer, as you know, which includes alcohol, we don't supply any significant raw material to this what is called hand sanitizer. Hand sanitizer uses alcohol. Almost 20% of it is alcohol. Okay?
Oh, okay.
Hand wash, where you are able to wash your hands with hand wash and then with water. You require water. There, Galaxy supplies to almost every single manufacturer in this country.
And one last question.
Pawan, I'm sorry to interrupt. Maybe request you to come back into for follow-up questions. Thank you. The next question is from the line of Bharat Sheth from Quest Investment Advisors. Please go ahead.
Hi, sir. Yeah, so congratulations on good shade of number on these difficult times.
Thank you.
And sir, just I missed your opening remarks. So one thing, how these input costs and are behaving now, which was last year first half was going up. So and how do we see input cost scenario? That is one.
So Natarajan, yes, so input costs essentially have softened, as you know, both the petrochemical feedstocks and the oleochemical feedstocks. So, and what we expect, this to continue at a flat level at least for the coming 3 months. We don't know as to how things turn around, but we would expect it to be in this particular zone for the coming months.
Okay. So now taking little longer term scenario, see now after several years of no much capex, now in last 3 years, 18, 19, 19, 20 and 2021 roughly we will be spending around 600 crore including land purchase of 80 crore. So how do we see our asset turn as you said that once we reach, what kind of capacity then we again look for the next capex. So overall, if you can give some your thought process is the kind of capex we are doing is to what exactly is the management philosophy, whether for new more product or within our core business. So if you can share sir, your thought process from 3 years perspective.
So all our investments are into our core areas, which is in the home and personal care segment.
Okay.
And as we said, we invest in both the performance surfactants and the specialty care ingredients line.
Okay.
So there are 3 legs we invest. One is in terms of enhancing our R&D capabilities. Okay, enhancing our performance surfactants capacities and enhancing and investing in new capacities of our specialty care ingredients in terms of what comes out of innovation funnel. So there's a combination. Whatever we've been spending in the last 3 to 4 years is a combination of all these 3 fronts.
Okay.
And it is only into the core area, that is home and personal care segment. There's nothing beyond that.
Fair. Within that also new, chemicals or anything that if you can, and how do we see asset turns? If you really out of the 600 crore capex, we remove 80 crore on for the land purchase, around 500 is on the capex.
Out of it 500 also see about 60 to 70 is for our multi-purpose product plant in terms of enhancing the innovation capability at Tarapur. Okay. So typically if we look at 400 to 450 crores of capex, okay, which is both in the performance surfactants and specialty care ingredients, our typical asset turns are about 2.5.
Okay.
You're talking about something like 1,000 crores of revenue from that. This is the asset turns that we have historically had.
And in your broader time frame, so whether these will take around 3 or 4 year or maybe less than that,
See, performance surfactants we typically always invest with a 3 to 5 year horizon in mind, demand horizon. Whereas specialty we do, if the horizon of about 7 to 10 years. So that is based on the past history that we have now. For example, if you have the hygiene consciousness enhancing significantly and people wanting to use more and more of cleansing products, okay, we probably will have to look at a capex very soon. So we only wanting to wait and watch till end of this year to make a clear statement on that. But what is it? We are well positioned, okay, to be able to participate in the demand growth that if it turns out. So that's what we would like to comment.
And within specialty care, are we adding any more new product with the innovation what we are talking? So the product portfolio within the specialty care is increasing. And second thing, on US we had acquired one facility for protein based. So any color on that?
Yeah. See, innovation is a continuous process in response to the consumer trends and the market trends.
Okay.
So the innovation pipeline will have many products at various stages of development.
Okay.
So an innovation happens both in India as well as the US. Okay?
Yeah.
So the US innovation is more specifically oriented towards the proteins, the cosmetic proteins.
Correct.
Yeah.
So are we seeing that? That to ramp up. In
Yeah. There also continuous innovation happens. We have last year, for example, we put about two new products into the market. Yeah.
Okay. And how do we see this acceptability within, because from the US customers?
Yeah, they are accepted well, but everything has what is called a horizon. Any product. See, fortunately, for example, the performance surfactants, if you look at our performance surfactants, these have had a horizon now, 70 years continuing, okay? Whereas certain specialty products will have a horizon of 30 years, 40 years, 50 years. So the horizon, we have long horizons as far as our industry is concerned.
Yeah, sir, you said that we...
Bharat, I'm sorry to interrupt. May we request you to come back in case for follow-up questions? Thank you. Participants are requested to limit their questions to 2 per participant. Time permitting, you may come back in the queue for a follow-up. The next question is from the line of Rohit Sinha from Emkay Global. Please go ahead.
Yeah. Thank you for taking my question, sir.
Yeah.
Just want to know, would it be possible to share what kind of market share we have in the domestic and globally during FY20 and possibly in the last 3 months, how it has been moved?
Yeah, so I think we obviously we hold a significant share in terms of the India market, and globally, as in certain, we would not be able to say the same about our global market of certain products. In some product categories, we hold a very major share. So, and it has not changed in last quarter or what we say. Our objective is to keep growing our significant share that we already have in India, and also enhance our share in the global market.
Okay, for your information, we became market leaders in 1986, and since then we have maintained, sustained, and enhanced our market share in this country, in line with the growth of this country.
Okay. And next, which are the new potential segments for our future growth? Looking at both our performance segment and facility segment.
So as we said, we as a company have been driven by a mission with respect to improving the quality of life on cleanliness, hygiene, wellness, beauty, care, comfort. So the consumers are driven by their needs and trends with respect to safety and sustainability. So we have already talked about, with respect to specialty care products, our focus on mildness and mild surfactants and non-toxic preservatives. This will continue, okay, though there is a short-term blip. On the performance surfactants, mostly they are oriented towards cleaning, hygiene, sanitation, washing, and they have taken a significant amount of uptake because of the situation that the world is going through. We see more and more consumers rightly focusing and their attention on hygiene. I think the way the consumers have been bothered about not only their personal hygiene but also hand hygiene, because the hand hygiene was not a very important category or a significant category as it should be in India. Okay. Now this has seen hand hygiene. The emergence of hand hygiene started only about, let us say, 15 years back in a significant way, and you have seen a really sharp surge in this last 1 year. Okay, and we hope this continues. And the same is the case with home hygiene. I think India as a country saw consciousness about home hygiene in a significant way. I mean, so home hygiene, it could be toilet hygiene, it could be bathroom hygiene, it could be floor hygiene, it could be dishwashing. These have seen a conscious emergence only in the last 15 years, and in the last 3 years, I would say these categories, their base is small, have seen significant amount of growth. They have seen double-digit growth, high double-digit growth, high teen growth, what I would call. Yeah.
Okay. Yeah. So basically, we will remain in these home hygiene and personal care segment continuously.
Yeah.
Let's added new products or maybe sub-segment you can say, which would be driving the growth.
Yeah. For our focus always has been the home and personal care industry, and possibly we are possibly the only company in our industry, both India and globally, who are totally focused on the HPC segment.
Thank you. The next question is from the line of Nav Bharadwaj from Anand Rathi. Please go ahead.
Thank you for taking my question, and congratulations on completing 4 decades, sir. So just a short question on the gross margin part. At the cost of repetition, could you please explain as to how much of it has been from the raw material part, where you said that prices are supposed to remain soft for the next quarter or so, increase in prices due to product mix change, or any new products that we put in, and how much of this would you say that it's artificially induced with the current situation?
No, I don't think we'll be able to give you the breakup, but what is that there is a combination in terms of the way that our portfolio changed with regard to Tier 1, Tier 2, Tier 3, the way it changed within specialty and within performance, okay, and the way we manage the raw material risk. So it's a combination. So what I would like to say is that it is, that if there is no, if you have this momentum continuing, things should, be the same moving forward. But then yes, okay, there is nothing that we could say was something one time that came in the last quarter. That I explained earlier when Sanjay asked it.
Right.
Yeah.
So we do feel that this is pretty much sustainable for the foreseeable future at least.
So what happens is that the degree may vary, but in terms of the composition, okay, we don't see that being significantly different. But the degree may vary. So if you see that there are, it all depends on what sort of demand profile emerges for some of the performance surfactants, some of the specialty ingredient, how the portfolio churn happens. Okay, that all depends on how the demand is going to emerge from the customer side. Okay, so it will be too premature for us to comment on that.
Fair enough.
Yeah.
All right, thank you so much, and all the best going ahead.
Thank you.
Thank you. The next question is from the line of Abhijit Sinha from PI Square Investments. Please go ahead.
Hi, sir. I just wanted to understand, sir, what is the views on the fatty acid prices going forward?
Which prices?
Fatty acid prices.
Fatty acid price, this all agri commodities linked. So as of now, they seem to be in a steady state. Okay, but it all depends on how the supply side is going to be in terms of the yields, okay, of the farm and farm derivatives. Okay, so the high season months will start from now. How the production is going to be, keeping up with the consumption is what is important. But our thing is that it will continue to remain flat at these levels with sideways movement. That's the way we are seeing it.
Okay, because in your presentation, sir, you've shown that the fatty acid prices have actually gone up since Q4FY20 over the last 2 quarters.
Fatty alcohol.
Okay. So, and sir, I just wanted to understand that the home care segment and